On Christmas Eve 2025, Beijing's decision to ban all new investment in India's automotive industry sent shockwaves across the globe. This isn't just a regional spat, it's a seismic shift in global economics, forcing companies and countries to pick sides. The ban challenges India's rise as a manufacturing alternative to China, upending years of globalization and supply chain planning. By targeting autos, a pillar of modern economies, China aims to stall India's industrial ambitions and send a warning to the world. Decoupling from China comes at a cost. The world's third-largest auto market is now the epicenter of a new era of economic rivalry, with consequences for workers, consumers, and governments everywhere. The era of frictionless trade is over. A contentious new chapter begins, with India's auto industry as the first battleground. China and India's economic ties stretch from the Silk Road to the digital age, weaving a complex tapestry of commerce, culture, and competition that has shaped both nations for centuries. Yet, despite this long history, their modern relationship is defined by a persistent sense of imbalance and deep-seated mistrust. By 2024, China had become India's top trading partner, but the numbers told a troubling story. India's imports from China vastly outpaced its exports, creating a trade deficit that many in India saw as a source of economic and strategic vulnerability. Tensions escalated after border clashes in 2020, prompting India to tighten restrictions on Chinese investment, especially in sensitive sectors like technology and automotive manufacturing, where security concerns ran high. Despite ongoing diplomatic efforts and high-level talks, suspicion lingered. Chinese firms faced mounting scrutiny, and only a small fraction of their investment proposals were approved by Indian authorities. India's growing alignment with the US and Japan further deepened Beijing's unease, as New Delhi increasingly viewed Chinese capital not just as an economic opportunity, but as a potential threat to its sovereignty and security. Occasional diplomatic thaws and rounds of negotiation couldn't overcome the deep-rooted mistrust that had taken hold on both sides. The pendulum between economic opportunity and rivalry has now swung decisively toward confrontation, as both countries brace for a more contentious future. With this sweeping ban, China signals to the world that it will not tolerate efforts to curb its influence or challenge its economic dominance in the region. The stage is set for a new era of open economic competition, with both nations recalibrating their strategies and alliances for the battles ahead. The world is watching closely as Asia's two giants redraw the rules of engagement, knowing that the outcome will shape the future of global trade and geopolitics for years to come. On December 23, 2025, China's Ministry of Commerce abruptly banned all new Chinese investment in India's auto sector, from manufacturing to EV batteries. The move was a direct response to India's restrictions on Chinese capital, citing national security and a hostile investment climate. Chinese FDI in India had already plummeted, but the auto sector remained a key focus. Firms like SAIC and BYD had big plans for expansion. The ban halts these ambitions, cutting off capital and technology, especially in EVs, where China leads globally. Beijing's message: if you block our companies, we'll block your growth. The timing is strategic, just as India's auto market overtakes Japan's and global automakers pivot production from China to India. China's making it clear it won't stand by as it's sidelined from India's growth story. For India, the ban is both a validation of its protectionist instincts and a major disruption. Domestic automakers gain breathing room, but the industry's reliance on Chinese components, especially for EVs, creates immediate challenges. While the ban targets investment, it casts a shadow over trade, raising fears of supply disruptions and higher costs. India must now accelerate efforts to build a local supply chain, from batteries to semiconductors, a task requiring massive investment and years of work. Government incentives become critical, and the success of India's auto ambitions hinges on executing this pivot. In the short term, consumers may face fewer choices and higher prices, especially for affordable EVs. But if India succeeds, it could build a resilient, innovative auto industry, less vulnerable to geopolitical shocks. The ban forces India to confront its dependencies and double down on self-reliance. The road ahead is tough, but the stakes, and potential rewards, are higher than ever. The world's biggest automakers now face a stark choice: deepen ties with India and risk angering China, or play it safe and miss out on India's booming market. The stakes have never been higher, as both countries represent massive opportunities and risks. For global car companies, every decision now carries geopolitical weight, and the wrong move could mean losing access to millions of potential customers. Japanese firms like Toyota and Honda, who recently announced major investments in India, now worry about retaliation in China. Their leadership teams are under pressure to navigate this delicate balance, knowing that a misstep could jeopardize years of growth in either market. Western giants like Volkswagen and Ford must weigh Indian growth against their lucrative Chinese operations. For these companies, the challenge is not just about market share, but about long-term survival in a rapidly shifting global landscape. The ban could split the industry. Some companies may focus on China, others on India and its allies. This division could reshape the global auto sector, creating new alliances and rivalries that will define the next decade. Global supply chains will be reconfigured, with countries like Vietnam and Mexico emerging as new manufacturing hubs. Automakers are already scouting new locations, seeking stability and lower risk in a world where old certainties no longer apply. Efficiency takes a back seat to political risk, adding complexity and cost. Companies must now factor in not just logistics, but also shifting alliances and trade barriers. Boardrooms are now war rooms, balancing profit with geopolitics. Every strategic decision is scrutinized, as leaders try to anticipate the next move in this high-stakes game. The new reality, where you build, matters as much as what you build. Location is now a critical factor, shaping everything from supply chains to brand reputation. The cost of this realignment will ripple through the industry and to consumers worldwide. Higher prices, longer wait times, and fewer choices may become the new normal for car buyers everywhere. The auto sector is now a front line in the global contest for economic power, and every automaker is being forced to pick a side in this new era of uncertainty. Beyond boardrooms, the ban's impact is deeply personal. In China, engineers and managers see career plans upended as India's market closes to them. In India, thousands of jobs tied to Chinese investment vanish overnight, leaving suppliers and workers in limbo. Yet, disruption breeds opportunity. Indian firms must now localize, creating demand for skilled labor and new suppliers. The government's Skill India mission gains urgency, aiming to match training with the needs of a high-tech, self-reliant auto sector. The pain is real, but so is the potential for a new wave of industrial employment. The ban is a story of lost connections, but also of adaptation and resilience. For every broken supply chain, a new one can be built. The human story is one of challenge and the chance to shape a new future. Experts agree, China's ban marks a new confrontational phase in global trade, one that could reshape the balance of power for years to come. The move is being dissected by analysts worldwide, who see it as a pivotal moment in the ongoing economic rivalry between major nations. Some see it as a high-stakes gamble. China hopes to deter companies from betting on India, but may instead accelerate their exit from China. The uncertainty is forcing global businesses to rethink their long-term strategies, weighing the risks of staying versus the opportunities elsewhere. The ban is a direct blow to India's EV ambitions, forcing it to pay more for batteries or build its own industry from scratch. This could slow down India's progress in the short term, but it also presents a unique opportunity for Indian companies to innovate and invest in homegrown technology. Politically, India's government can now rally support for self-reliance, turning a challenge into a narrative of national pride. Leaders are already using the moment to call for unity and resilience, framing the ban as a catalyst for India's technological independence. Globally, the move signals the rise of two competing economic blocs, one led by China, the other by the US, Europe, Japan, and India. This division is likely to deepen, affecting everything from supply chains to diplomatic alliances. Multinationals can no longer remain neutral. They're now strategic assets in a geopolitical contest. Companies must navigate a landscape where business decisions are inseparable from political considerations. The China-India auto dispute is a microcosm of a much larger global struggle, reflecting the broader tensions shaping the future of international commerce and industry. The choices made now will shape international relations for years to come, influencing not just trade, but also security, technology, and global cooperation. Trade, technology, and politics are now inseparable, each driving and amplifying the other in ways that were unimaginable just a decade ago. The world is entering a new era of economic rivalry and realignment, where every decision echoes across borders and shapes the global order of tomorrow. The global auto industry is bracing for a period of costly realignment. Automakers will accelerate efforts to build regional supply chains, reducing reliance on any single country. New investments will flow to India, Southeast Asia, Mexico, and Eastern Europe, creating redundancy to guard against geopolitical shocks. China, meanwhile, doubles down on its domestic market and its own economic bloc, but risks isolation from global innovation. India faces a historic test. Can it become the reliable, scalable manufacturing alternative the world needs? Success requires sweeping reforms, better infrastructure, and aggressive courting of investment from Japan, the US, and Europe. The US and its allies must decide whether to actively support India as a counterweight to China. The choices made in the coming months, in Delhi, Beijing, Washington, and Tokyo, will shape the future of global trade. The world's supply chains are being redrawn in real time. China's ban is a stark reminder of the fragility of global interdependence. The old belief that trade would guarantee peace and prosperity has been shattered. Economic ties can be weaponized when trust breaks down. The challenge now is to build a more resilient globalization, one based on trust, transparency, and shared rules. Diversifying dependencies is essential. No single country should hold the world economy hostage. The story of China, India, and the auto industry is a mirror of our times. The road ahead will be bumpy, demanding careful navigation and renewed purpose. The great question: can we rebuild trust, or are we destined for a world of divided roads?